We now have 3 months of data this year, which concludes our first quarter, and this video is going to give you context into what is happening in a real estate market. If you haven't been following along, here's a snapshot of the historical average price points and how they have reacted throughout the years since 2019. So here, as you can see, is March 2024, and you can see that the prices are starting to tick up again, and you'll see that if we go back in time, the lowest points here have been January, which is the lowest points during any year because of the natural ebb and flow of timing. People are busy, the weather isn't great, and we're coming out of the holiday season, and most people are taking the time to prepare their homes to list in the spring. So January is fairly a traditional time for the slower market. So if we were to look back here, this tells a story of last spring where interest rates dropped very quickly because last March there was a banking crisis and it brought down the bond yield, which affects fixed rates, and those have come down into the mid fours at that point in time, and you can see what has happened to prices after that. We had a slight increase. Then the Bank of Canada, of course, got a little bit nervous and ended up raising the overnight lending rate twice in June and July, which was a little bit of a surprise last year, but not a total shock because, as we all know, they're trying to modulate and monitor the growth trajectory here to fix the problem that we had at the peak in 2022 where we got ahead of ourselves. And we seen the market come down in the fall of last year because those fixed rates grew to just over 6%. And I mean, it's obviously a no-brainer that the average prices of homes are directly correlated to what's happening with rates, whether they're fixed or variable, because that ultimately alters buyers' purchasing power. So the reason why we're starting to see prices increase a little bit right now is because that fixed rates have come down again by 1%. And I'm even seeing some lenders offer a 4.895 year fixed. The fluctuation in rates will allow people who need a little bit more for the home that they want to re-enter the market, in addition to those already searching. Now, what I do find interesting and what I'll get to more in a moment here is the buyer activity, meaning how many sales are still happening, and they're happening for various reasons. I mean, we're talking about homes here. This isn't the stock market or the auto industry or whatever else it is. People always are going to need a place to live. A lot of people are under the impression that the market is either crashing or tanking, and which in my opinion, this word crash is a little bit subjective. And I don't think that the people that use this word use it in a definitive meaning across the board. Yes, there's going to be moments in time where the market is a little bit more quiet, and there will be moments in time where the market is starting to pick up more speed. Historically speaking, though, the market has always ebbed and flowed, and depending on how you're measuring and assessing the market, you're going to see that the longer that you are in the game, over the long term, values do go up and down in an upward trajectory. But I do think what a lot of people are getting sick of hearing is how fast that home prices have accelerated in such a short period of time. And it's usually from people who are on the buying side of the fence, which is totally understandable. And of course, it could make people's stomach turn and really cause a lot of uncertainty. But having context behind the numbers and actually what's going on is paramount when making any real estate decisions. Putting the numbers on a graph like this illustrates that they've done a pretty good job at bringing values back down to earth and in line where they should have been all along. Obviously, the caveat to this is that cost of ownership, meaning interest rates, are higher than what we're used to. But from seeing the activity in the market, it's clear that people are starting to become more educated when it comes to their personal situation and not just taking what the media is saying. I'm having a ton of conversations with people right now who have been on the fence of either buying their first home or moving up to a bigger home. And after talking to the bank or mortgage broker or with myself, they realize that this is actually more doable than they thought it was, and they're actually able to liquidate some funds, purchase the home that they need, and have cash left over. This graph is a good illustration when it comes to the last 12 months and looking at things at a glance. So a few things to note here. Firstly, let's look at the correlation between supply and demand. Now, we use something called months of inventory to measure how many buyers are looking versus how many sellers are on the market at any given point in time, and we take that by dividing the number of active listings and dividing it by the number of sales. So if that number is 3 or less, it indicates that there are more buyers in the market than sellers and that our inventory levels are shrinking. If this number is over 3 and below 5, we're in a balanced market where there's equal opportunity for buyers and sellers. So back to what I was saying, when last spring we had a banking crisis and fixed rates dropped, the number of sales increased from March to June. And then in the middle of June and July, the Bank of Canada raised rates, and look what happened to sales. they dropped off. We had more sellers enter the market, which also had a direct correlation to price, which as you can see here fluctuated a little bit. However, from this graph, you can see that although prices are coming up and down a little bit, we're not seeing these major swings that we were once seeing, so this is indicating a healthy market. Next graph I want to show you guys, I'm really excited to show you because this one, it does a fantastic job at illustrating how the rates have affected your home values. So the red dot shows the trend of the average price of homes, and the blue dot represents interest rates since 2020. Right here was February 2022, and you can see that the last blue dot was also February 2022. As the rates started to increase, you can see how it directly correlated to prices coming down. Now what's interesting to note here is that in July and August of 2022, there was a short period of equilibrium, and as interest rates continued to rise, home values started moving sideways as opposed to continuing to go down. Naturally, as I mentioned before, there will continue to be ebbs and flows in our marketplace, and we can see how that has played out seasonally within the last 2 years. This rise from January 2023 till spring of 2023 speaks to the resiliency of our marketplace, because during the times rates were in a holding pattern, then as we move through the summer months, they raised rates in June and July, which caused this compounded uncertainty in our market. But since the summer months, we are back into a holding pattern from the Bank of Canada, and it seems like we are back in line with the seasonality of Toronto real estate at a much steadier, stabilized pace, because this increase that we saw in the steep incline in price at this moment in time was obviously not sustainable. Last graph here. Here's a snapshot of the numbers that we're going to be hearing throughout the media, because they only really speak about the GTA as a whole, but as we know, there's different markets and pockets and housing types which all react very differently. I'll probably make another video on that, breaking down each asset class from condos to townhouses and detaches, but let's just keep this short and sweet. Now year to date, so for the first 3 months of this year over last January to March, the average price of a home is up a very small amount at 0.3%. Now I know we're used to seeing some pretty wild appreciation numbers, but this is very healthy, and the market is behaving exactly how the Bank of Canada was hoping for. They're trying to moderate price growth and fix the misstep of when the market ran away from us, when rates were too low for too long. If we looked at how the March of this year was compared to March of last year, we're up 1%, and if we were to eliminate 2022 for a moment here, home values are up over 2021. Now something to keep in mind about the spring of 2022, not everybody bought during that time. Yes, there's obviously people who purchased during that time and possibly are feeling a little bit stung, maybe more than others, depending on their personal situation, but it's only a matter of time until they start seeing home values go up. When that time is, you ask? I wish I knew. Transaction volume has dropped month over month. However, March wasn't a typical March, and this number is a little bit misleading because not only did we have March break, we also had Easter, which kept people busy and maybe deferring their search for the coming weeks. But year to date, so far, we have seen an almost 11% increase in sales. Here it notes that we've had a 23% increase in listings, but the media isn't really telling you that most of that is coming from the condo sector. So before I made this video, I wanted to quickly look at the absorption rate of detached homes and townhouses in the GTA before making this, and it is much, much lower than where condos are at. There's still not a whole lot to choose from in the freehold segment of the market. The market is moving along at a steady pace, and I don't foresee this being really a bang buster of a year for the overall GTA at the direction and the rate that it's going. It's indicating a really steady, healthy market considering what we just came out of. And I think over the next 2 months, we may not see a massive year-over-year numbers either when it comes to sales, because April and May of last year were the busiest 2 months of the year, but I would suspect it's going to be fairly close. That being said, keep in mind this is only speaking for the entire market, and my goal for this video was to put what the media was saying into context. So if you're considering a move this year, keep in mind it's all relative. If you're buying or selling or vice versa, it's all in the same market. But if you want a deeper dive into the areas that you're considering buying or selling in and seeing where the opportunities are, use the link in the description below to book a time that is convenient for you. Ciao for now, I'll catch you on the next one.